Welcome back to Investing with Confidence. I am your host, Joshua David, having a good time talking about the stock market. Al, are you having fun today?
I always have fun when we're doing this show.
Well, it's always great to be just talking about the markets and helping our listeners make smart investing decisions. And we were just talking about how the smart money is using the market for income potential, and they're using multiple assets, not just stocks. They're using options and futures and Forex, keeping more of the capital based off taxes, but being able to use the market any time of day because like the futures market, the Forex market, those are actually open almost 24 hours a day. So Al, you know what? I forgot to do one thing.
Let's do it. Whatever you forgot, let's do it.
We had this investing class. We had a lot of people call in for it. It's great to see a lot of people calling in for this investing class because we get to talk to people and actually introduce you to what you're going to learn in this investing class. So I want to invite more people to that class right here in Bloomington. You can just call 952-814-4410. When you do that, we'll get you a text back. Oh, actually, you know what? Text the word invest to the number 484848 as well. If you're a texter, we're going to send you a link back with a date to pick a date for this class. We do these during the week. We also have these on the weekend. There's also a link on a short video on what to expect in this class. So you can kind of get a little more preview on what you're going to learn and what the different techniques and concepts in that investing class. So, Al, we were talking about that income potential for people. Let's just say people are in their working years, 20s, 30s, 40s, 50s, even 60s, unfortunately. There's a lot of people working. And there's, you have to have enough income to fill a retirement bucket.
Right.
We classify things as buckets. You have an income bucket and you have a wealth bucket. But people just don't have enough in their wealth bucket. So you help a lot of people with different techniques and concepts to have the potential to have enough. And that's what it's all about. You have to do things a little bit different because, I've been talking with a lot of people lately, and they say, the market's been going up, all-time highs. My retirement account is not reflecting that same thing. What do you do to help people have better choices during their, we'll call it retirement years. We'll just call that between 60 and 100.
Yeah. Okay. And for a lot of people, that 100 it may be even on the short side.
Yeah.
But here's the important thing. I think that of the two components, there's that income component and then there's the retirement component. I think you have to really deal with the income component part before you can really have that wealth retirement component. So if you're still working, this is a great time to learn how to generate additional income. But let's say you're retired or you're getting ready to retire. How do you generate income in retirement? And instead of looking at, look at your retirement money kind of as a big pile of snow. We've used this analogy before. And what happens with that snow over time? It diminishes and pretty soon it's gone. It melts and it's gone. Well, if you're just looking at your retirement money as something you draw from for your living expenses, pretty soon it dwindles down to nothing. So what we think is important, more important than the size of that retirement savings account, is how you generate income off of it. That's what we teach our students. You need to learn those income strategies first because you can use them in retirement. And then you also want to be able to grow those retirement accounts. So maybe you want to leave a legacy. We have a lot of people that come in with some great ideas on how they're going to help people. Or maybe they have a big family, a lot of kids, a lot of grandkids, and they want to make sure that they're financially secure in their life. Because I think with all of the debt that we have out there, all the things that are going on, a lot of the repayment of what we're spending now is going to fall on the shoulders of our kids, our grandkids, our great-grandkids. So in many cases, we have students that are looking at just being prepared so they're, the next generation and the generation after that has something to feel secure with. And right now, the two biggest concerns that boomers have, people that are going into retirement, number one is outliving their savings in retirement. And then a large percentage of them are really concerned about Social Security not being there or being reduced to the point where they really can't count on it. And unfortunately, about 40% of the people out there feel that they have to rely on Social Security as their primary or maybe only source of income in retirement. And that's not a real comfortable thought to have. So there are things you can do. The strategies are there. Well, we talk about futures Forex. We talk about options. We talk about stock. Again, the rules for trading, all of those are the same. and that is just learning the details of the different assets out there that you plug into our core strategy, which is a rules-based strategy. And in retirement, one of the things that people are concerned about when we talk about investing is, well, I don't want to put a lot of money, my retirement money I worked hard for. I don't want to risk that. One of the things that we do that the Turtles also did. The Turtles, they had one of their rules was you only look at in any individual investment as 1% of your total asset equity account. Same thing that we do. Look at 1% and think about it. If you are going to be in a trade, would you rather lose 1% or 10 or 20%? That's why being concerned about your portfolio sizing is extremely important.
That's really good for people that are conservative. I think we've talked to a lot of people that say, "Hey, I'm really conservative. I don't want to put a lot of money in the market." Well, you know what? You don't have to.
That's correct.
You use your capital wisely and make smart investing decisions. And just a comment that you made there is the rules are the same when you're trading for short-term income potential or retirement strategies. So there's nothing really different. It's just the time frame that you're using. And you introduce people to those concepts and techniques, especially in retirement accounts in these investing classes, talking about how to manage your capital and navigate these crazy volatile markets, but also even in your retirement accounts, how to time the market by letting price come to you. So just text the word invest for 2 tickets for an investing class right here in Bloomington. When you text that, we're going to get you a text right back with a link, which is our otamin.com. That's otaminn.com. You got to click that link and pick a date for this investing class, whether it's during the week or on the weekend. You're going to get a financial quick start kit just for doing that. So, Al, you talked about, using smaller amounts of capital. Nobody wants to take all of their capital and put it all in the market. Well, here's a news flash, people. You're doing that with your broker. You're doing that with your advisor. They're putting everything you have into the market, most likely. That's kind of how they do things. Nothing against the people. That's just the way they do it because it's assets under management.
Right.
So how do you use options and take smaller amounts of capital to control much more, but also that whole 1% you were talking about?
Yeah.
That's what it's all about, is taking that small piece for a higher potential.
Yeah, and I'm sure a lot of people are thinking, well, if I only put 1% in something, how can I benefit from that? That's not going to give me much. You know what? It can. If you're using leverage, and that's what futures, Forex, and options provide for you is leverage. So every dollar you're investing controls a multiple of that dollar. We talk about this every week, the leverage, because it is so important. All of the big players, all of the pros, people like Warren Buffett, all of the traders use leverage in their trading because they know that's the smart way of utilizing their capital. It's really maximizing the value and the impact of the capital you have. A lot of people, we talked about Tesla and Apple before as a couple of examples. A lot of people are saying, well, I wish I had bought Apple when it was $20 a share. Now it's 151, 152. I think I'm going to pass. Well, you know what? You don't have to pass. If you think Apple is going to have a good move, or even Tesla, if you think Apple, let's just say Apple is going to have a good move in maybe in the next 2 or 3 months, instead of paying $150 some per share, or say $15,000 for a 100-share position, what if you could only pay $6 or $8 a share? You can do that with options, so you can still participate in these stocks that have high prices and really significant movements, but you can do it with a much smaller amount of money using options. Plus, you know exactly what your risk is. The reward can be unlimited. And you can also use options as protection, because the one thing you have to do with that wealth bucket, if you look at it as a bucket, is make sure there isn't a hole in the bottom of it with money leaking out, which all of you have right now because fees are being taken out of your accounts. You're going through corrections or crashes. Options can give you protection. You can have an insurance policy, essentially the same thing with an options position on your portfolio.
That's a great point there about using smaller amount of capital and basically buying a stock at a much smaller share price. Just as an example, say if someone were to buy an option, you're just paying just think of it as paying a small fee to control that, however many shares that you want. And that way you don't have to put up that whole amount of capital, as I was talking about with the option or with the Apple stock, with it being roughly $150 a share. Using a option can give you the potential to use a much smaller share price which uses much less capital.
Mhm.
In my mind, that's the way to do it, and that's why the smart money is doing it. That's why the banks are doing it. That's why the institutions are doing it. And as I was talking about, our good old friend, Mr. Warren Buffett, is
Yes,
also
he
doing
does.
that. So I want to invite people to an investing class right here in Bloomington to be introduced to those concepts with options, how to utilize your capital wisely in making smart retirement investing decisions in your 401ks, whether it's through your broker or your work or your IRAs. So you have an IRA with an advisor or something. Well, you can self-direct that. And let's talk about that in the next segment a little bit, how to self-direct. Just call 952 814 4410 or just text the word invest to the number 484848. When you call, you're going to get a financial quick start kit, which will also have cryptocurrency, a foundations course in there. Al, coming up next, I do want to talk about that self-directing and how to have a smart investment plan, whether you're during your working years or during retirement. 952 814 4410. This is Josh and Al